Ferrisi, Group Director of Content and Editorial, Industrial and Tech at Emerald, here once again at the HDBaseT Alliance booth at InfoComm 2026, where we're doing thought leadership discussions, panel discussions, to really get a sense of where the market is going and where we stand. I'm happy to be joined today by my friend Sean Wargo, who is Principal of Apogee Insights. We're going to be doing kind of a fireside chat, so to speak, talking about the state of the market, opportune vertical markets, opportune solution areas within the overall category. So thank you, Sean, for joining me. Always appreciate it.
Always a pleasure, Dan. Happy to be here.
Yeah, so let's get started with some of I'll start with headwinds, then we can start talking about tailwinds. Headwinds, obviously there's some economic distress out there, geopolitical tension to be sure, some pricing issues going on, tariffs and whatnot, chip shortages. So what are you seeing as the major headwinds right now? And I certainly don't want to focus only on the negative, but what is giving you hope in the context of those headwinds that we're going to pull through nonetheless?
Yeah, we're in one of those situations where we have constant new news that's challenging in nature, right? Yeah. So earlier this year, of course, it was Iran conflict, which then had immediate impacts to energy prices, oil prices, all that sort of stuff, which then creates headwind for corporate spending. Anytime you have these fluctuations in underlying cost structures, the corporate buyer is going to take a moment and reassess their landscape. It's like, are the prices that I would expect for my projects going to come in at those levels? Do I have to pad in other areas of spending to try to sort of prepare ourselves? In 2025, you and I think, talked a lot about hedge effects. So companies hedging their bets by looking at, okay, maybe I'll push projects out, maybe I'll slow things down. As we came into 2025, that wasn't as much the case. So despite headwinds, I think that companies were staying fairly resilient and able to spend. We've got new news, resolution perhaps in the Gulf. We'll see how that develops. That takes some of those contextual headwinds away. The thing though that is constant has really been consumer spending. Despite what you might even see in confidence data, the consumers have stayed pretty resilient. So we haven't seen a cliff effect in consumer spending that would then portend more weakness. There's obviously data to watch. Labor markets have slowed down, are still pretty good, but have slowed down. Inflation has crept up as energy prices have crept up. So all of those things are, I think, in economists' minds as they look forward to what GDP outlooks might be. But as we turn our attention to that in our conversation, we can see that so far, GDP outlook has been pretty good. US, European, the weaker part, as we even knew coming into 26 and through 25, was China, Asia. Those remain issues. But overall, I'd say, despite what might be challenging, disappointing headlines, for the most part, macroeconomics is looking pretty good, and there's a lot of underlying parts of that, particularly corporate spending, I think is a headliner.
Yeah, I mean, and corporate profits seem to be pretty strong as well, insofar as you're looking at stocks having almost fully recovered, if not more than recovered, from all that geopolitical turmoil. So clearly there's money to be spent. It's just a matter of making sure that our community is able to benefit from those opportunities.
Yeah, one of the outcomes of inflation often is, so inflation is an environmental factor, right? As companies see other prices going up, whether it's food or other commodities, there's sort of this natural willingness to then raise prices, which does bolster corporate profit in the end, because that may not be that their underlying cost structures moved as much. Certainly some of that too. But corporate profit data has been on the rise for 15 plus years. That's a great context for ProAV to be in, because the buyer themselves, even if they hedge, does have that money to sort of invest, and they are investing. And we're seeing that in some of the underlying data, is that yes, corporate profits are there, the buyer is flush to some extent, and so that leads to good landscape opportunity for us as an industry.
So I jealously seek your insight all the time, so I'm going to ask you whether you're going to double down and triple down on some context you've given me in past months and past years, or whether the situation has changed. I know in past conversations you've said some elements of corporate, like highly commoditized spaces, may not be the most ripe right now for high profitability. Some commoditized education spaces may not be the most ripe for profitability. You think a lot about the experience economies. It might be festivals or live entertainment or experiential exhibits like the Sphere, Shared Reality, Cosm. Is that still the case, or are we seeing meaningful profitability opportunities in corporate and education now as well? What is the balancing of opportunities that you see?
Yeah, I'll hold by those prior statements. Certainly I still see challenge in corporate and higher ed. I think that's just there's a contextual issue there, but more fundamental to corporate and collaboration is essentially there's a lot of entry-level or easy to use, easy to install, easy to manage technologies available for collaboration now, building on top of platform. That really is a scalability sort of play for that market. Lots of available product out there for that. I would also hold to the prior statements about venue and kind of experiential. Another data point that I recently kind of was taking a look at is construction data. If you look at two areas that are outsized, above average, so in April, the construction data came out for the US, it was up about 0.8 year over year. But two areas stood out at me. One was, certainly corporate was high only because of data center. Okay. So a lot of money being flowing into data center, AI, those type of investments. But it was hospitality, experiential in nature, which includes a whole gamut of things, retail, there's some, obviously hotel is in there, but nightclub, casino, those sorts of things. The other was venue, amusement parks and other experiential. Both were in 2 to 6% range growth, which tells us those are markets where that corporate profit we're talking about is starting to translate into investment in updated facility, new facility, stadium upgrades as an example. Maybe there's a little World Cup story there here in the United States. But that to me is another kind of supporting evidence for what we've been talking about for a long time, is that really experiential part of Pro AV, and supporting that is really where there's a lot more opportunity, better margin, that sort of stuff. A piece of it that I've also been watching is platform data that shows you the composition of projects. We're seeing a lot more projects emphasizing audio. Audio as a category is another area where there's a bit better margin story for the integrator and manufacturer. So I think that's another piece of this puzzle that kind of shows us where there's some strength for Pro AV.
Well, you mentioned venue, you mentioned hospitality. These are all places where you can kind of tell a story to some extent, right? The technology is the means of telling a story, give you those chill bumps on your arms, make you feel something that you didn't feel before you walked in. And it seems like now that we're talking a lot more about integrators being facilitators or guarantors of outcomes, not merely purveyors of product, that is something they can really lean into in some of those categories. Do you agree, disagree?
Absolutely, yes. So digital experience is a piece of this, UX, UI, all of those. More and more integrators are, I think, as you're kind of describing, are being asked to help curate an experience. Think beyond just the hardware installed to how it's going to be interacted by the audience, the attendee, the guest, the worker in some case, the employee. So absolutely I agree. I think companies that are thinking more holistically about that versus project to project, install by install, I think are on kind of in a better margin opportunity for themselves, because that becomes a marketing, it's the spending, the part of the organization that's involved there is more the marketing side, the branding side. So that is a stronger place for an integrator to be supporting those dollars. An extension of that, you've heard it said about InfoComm as a place where corporations who are becoming media companies are searching for content extension opportunity. So any one of the particular experiential markets we might think of, a venue, stadium, etc., they're producing content at the same time that can be leveraged on site but then extended out. A corporation, keep creating content from a all-staff meeting, from a press event. That's content that then can be leveraged out. So more and more companies, I think, are also thinking about digital extension beyond their experiences. So it's not just time, place, it's also beyond into the digital realm. All of that is great opportunity for an integrator, a solution provider, marketplace to grow beyond.
And that's broadcast AV, that's managed services, that is like, again, thinking beyond install to install. project to project, job site to job site. It's thinking, as you say, the extension. Extend all of that outward to your ecosystem, and then how can I, again, be that guarantor, not just today when the project is commissioned, but tomorrow, the week after, the month after, the year after. Am I going to continually be that touch point guaranteeing the outcome you want?
Yeah, it's strategic involvement. It's the conversation with the client becomes more about, tell me about your organizational goals from here. What are you trying to have content help you do? What are you trying to have your experiences help you do as an organization? That keeps you plugged in to a more continual evolution on, yes, sure, the product that they're installing to accomplish those goals, but more so the data that's flowing from it about their customer base, the data that's flowing about the contribution technology is making to their revenue, to their productivity, all that sort of stuff gives you an opportunity to make a plug for a roadmap, for a managed service type of offering, the things you and I have talked about year after year after year, and as we've tried to search for as a industry for a long time. But yes, I think it's staying plugged in at the right level to an organization's overall strategy and operational activation around that strategy. That's the sweet spot, let's call it.
My own feeling is that the best role of an integrator is to be that strategic consultative advisor. You know, they're not a consultant per se, because they are executing these projects, but before they execute, during the execution, after the execution, that ongoing strategic consultation to make sure what we are doing as integrators is fully aligned and even shaping their internal vision of what their technology estate should be. Absolutely. Is that kind of what you imagine?
Yeah, I think that's right. They've always searched for this. You know, there are other players involved, other influencers involved in that conversation, an architect, a marketing team, a branding organization, PR, there's a lot of different stakeholders. But I think, yes, having a seat at the table earlier on is certainly what we've always strived for as an industry, and I think it is coming back to zooming out from a conversation about a particular, say, install, and more talking about objectives, outcomes, those sorts of things that are desired. That's the key, and that's what leads into the managed service conversation and other supporting services that an integrator can bring to bear.
I think you always look at the industry with clear eyes. It never seems like you have rose-colored glasses. You may be an optimist, but I think you look at it pretty honestly. What would you say is the biggest downside risk that you see? I mean, you know, black swans, of course, you can't predict. They may be more common than they used to be, but what is the biggest downside risk? And then what would you say is the mitigating factor that makes you feel we're probably not going to go in that direction? We're probably going to be better than that.
Yeah, I continue to keep an eye on consumer spending, because at the end of the day, as an experiential industry, consumer willingness to be out and about, spending on experiences. We saw the reverse of this, obviously, pandemic, everything pulled back and then came roaring back plus, right? I worry that inflation has been persistent. I worry that energy costs have, of course, gone up, particularly in certain parts of the world, Europe most pronounced, even in Asia. The more that persists, and the more that you might see wage stagnation, which is sort of happening a little bit even here in the United States. Wage growth year over year has been a little bit slower than it had been in the past. Those sorts of things might create a recessionary risk. You know, consumer pulls back. The counterpoint has been there's such good corporate profit that the stock market is surging. If you look at our 401ks, our retirement funds, as an example of that. The top 30% of consumers that really benefits in a pronounced way from the stock market is what's propping up the economy. They're spending in spades on things outside the home. Less and less in home, more and more out of home. Right. So that's been the counterpoint so far. But you have to watch it, right? It's not an overnight immediate phenomenon. It would be more, let's say, taper that then creates a contextual that puts the industry downstream at risk. Lower corporate profits in those areas, less spending, less motivation, less incentive for the experiential parts of the economy to reinvest in those experiences. And we're talking, those are like 3 to 5 year out types of risks. Near in, it's probably, we've still got some good pent up corporate profit, we've still got consumers willing to spend. So I don't see it as an immediate, but you have to watch it, right? Just from a fundamental perspective.
So last question. Before we went live, we were kind of joking, Apogee Insight, one insight. If you were speaking to an integrator and they said, give me one insight rooted in the data that you look at every day, I'm trying to imagine how to position my business, how I can make sure my 27 is more profitable than my 26. It could be a technology solution area, it could be a vertical market, it could be a business reimagining. What is the one insight you would give to an integrator to say, that's what I would put my money on?
Yeah, I think we touched on it. So to refer back a little, it's the inserting yourself in the conversation earlier and finding ways to do that. Emphasizing the parts of your sales pipeline where you are able to have those conversations. But there's another subtlety. Apogee Insight wasn't intentional, but that also stands for AI short, AI Inc., AILCs. And I would say the other piece of what's going on, you and I have talked about in the past, is how has AI become a tool to enable that kind of having those conversations and creating outputs, outcomes, adding efficiencies, adding creativity, adding supporting service sets. I do see AI as a fundamental ingredient to enabling that turning point on managed services that we've been looking at for years, decades as an industry. It adds the resource ability that we didn't have before where we're throwing humans at it. So obviously creative, innovative, entrepreneurial organizations, integrators included, are already experimenting in very purposeful and I'd say cautious ways appropriately for how to use AI, but I'd say, how are you thinking about AI in a different way to give you force multiplication with the resources you have to elevate your conversations, go after managed services in a true meaningful way to essentially bolster, improve, and support margins long term. That, in a nutshell, right? Every company's different. It comes down to how you activate on that. That's why we're here, is to kind of help those conversations. So.
And it's fascinating to watch various integration firms really lean into it. Like CTI is one I think of that's really leaning into AI considerably, and they are certainly not alone in doing so. But thank you so much, Sean, for joining me. Always a pleasure to hear from you, learn from you. Thank you for joining me today.
You're welcome, Dan. Pleasure to be here.
Thank you. My name is Dan Ferrisi, Group Director of Content and Editorial, Industrial and Tech here at Emerald, and I'm happy to be working once again in partnership with the HDBaseT Alliance at InfoComm 2026, talking to thought leaders like Sean to get their insights into where the market is going and how we can position ourselves for maximum success.